What's going on, guys? I know it's been a while since I have uploaded a YouTube video, but today I am back and I want to start uploading more consistently, teaching you how to trade the 15-minute opening range breakout and my IFEG strategy, the GUI model. So without further ado, I'm going to break down a few examples of different ways I trade the 15-minute orb using pullbacks, using IFEGs, using fair value gaps, and breakouts with draws on liquidity. So let's do it. All right, guys, so I have NQ1 pulled up on my charts with a 15-minute opening range breakout. Now, in this example, there are multiple ways to trade the orb where you could have won a trade, but I want to teach you different ways so that you don't just have one simple way to trade the orb. You have a variety of ways to be able to get involved using this strategy, but also to maybe increase your win rate and stay out of some bad trades. So before we can do anything in terms of actually taking a trade, we have to figure out what our daily bias is, what our draws on liquidity are, so that we have an understanding of where the market's actually going to go so that we're not blindsided by movement or direction when we're actually looking for our trade. So when I pull up these charts on the higher time frame, I notice that we are in a range, but we're starting to break out of this range at these lows. You can see we've gotten a close below this swing low here over here. And we've taken out a lot of our sell side, and we do have an external low down here, all the way down here, that is going to be a pretty strong draw. And then if we look further on the 4-hour, we see that we had this 4-hour bearish value gap right here, or a 4-hour SIBI, and price actually traded back into it once and twice and rejected it both times pretty strong. So what this tells me on the 4-hour time frame is that we are more likely to come down and take out these 4-hour lows. And then if we go down to the 1-hour time frame, we're going to see that we also have 1-hour structure that shows us bearish. We had a few bullish for value gaps here on the hourly. Right there, we had a bullish for value gap or an hourly busy. What did we do? We inverted it. We closed below. And then we looked down here. We had an hourly busy right here. What did we do? We inverted it. And then we created a bearish for value gap on the hourly time frame right here. This is a 1-hour SIBI. And we also created a 1-hour bearish order block with this up close candle right here. So now we have a bearish order block and a bearish fair value gap with a strong down close candle, leaving this gap with a strong draw on liquidity with those 4-hour lows down here. So this is all lining up going into market open to give us a really good setup. So this is when we actually are going to jump into our 15-minute orb. And that's when we're going to chart out our 9:30 a.m. candle. So it's the first 15-minute candle of market open New York session. So what I do is I chart out the high and the low from wick to wick. So right there would be my orb high. Down here would be my orb low. We can also see that we have another sell side level here. This was a 15-minute low. This is going to be another draw on liquidity. But really our main draw is going to be all the way down here at that 4-hour low. So what I like to see going into market open is some kind of retracement of a range that we made during the morning. So right here you can see we created this range from high to low, and then what did we do? We retraced perfectly into the premium or the top 50% of this range, and also into the golden zone, the 0.62, 0.79 on the fib, which is our reversal zone, and we got a nice rejection from there. So this is all setting up pretty good for a short position. You can also see that we have a few 15-minute bullish for value gaps down here. So what we would want is for price to inverse these gaps, like this one right here that's overlapping our orb low. So if we could get a breakout of this range and get some inversion showing us bearish order flow, we'll have a really good understanding or where price is going to go, or if it's actually going to follow through on our bias. So right here, I'm going to kind of get rid of some of these other things. We know we're in an hourly gap. We know we've retraced 50% of a range. We've now created the low. And this is what I really love, when price retraces to the premium of our orb range. So this is when I use my fib from the low to the high of the orb, and look at how we got perfect retracement right here into a 5-minute bearish for value gap. See this 5-minute gap right here? Boom, that's a 5-minute SIBI, sell side imbalance, buy side inefficiency. See if I can find that 5-minute SIBI. And then we pull back into the premium or the top 50% of our orb range. So now what we want to see is a rejection from up here, giving sellers intent to move down to sell side liquidity, down to first standard deviation of the range, and also down to that external low below. So this is when we're going to get into our actual entry models and how to trade it now that we have our bias figured out, now that we know where price is trying to go. So the first option we have is option number 1 would be the most aggressive orb trade that you could take here. and that would be just a fair value gap and 50% retracement of the range. So right here, you can see that we have this 1 minute SIBI. We're also, if you remember, we're in that 5 minute SIBI as well. So now we have two bearish fair value gaps that we're sitting in the premium of the range. So one way you can actually trade this is literally by just jumping into your entry once we trade back into this level and keeping your stop above the wick of that fair value gap candle or at the orb high. Because at this point, we're not expecting this to go sweep the orb high. And I'll show you why, because we see ES. If I can bring ES all the way back, I will give you an example of it where ES on that same exact time. Let me pull it up for you. Over here. Where is Friday? Okay, so right here, ES is actually coming up to the top of the orb. So this is the orb high on ES. So if we notice one thing, we get an SMT at the opening range high. So if ES takes out the opening range high, we are not expecting NQ to go take it if we have a bearish bias. As you can see, ES ended up following through as well. But this tells me I can take the aggressive entry in the orb, and I'm going to have a protected high up here on NQ. So we always want to be looking for SMTs at the orb high or the orb low with ES, because we have our correlating market. So right here, this would be the first entry you could take, where you literally just wait for price. You could set a limit order up here, or you could wait for a reaction, and then you wait for price to tap into here. You keep your stop above the orb high or at the orb high, and now you're literally just holding your trade until we come down and take out our sell side levels. So you could either look for this low, that hourly low, you could hold down for first standard deviation, or you could hold all the way down for our 4-hour lows, which is our external draw on liquidity. So a few different options that you have for this trade. But I just kind of want to show you how this one plays out real quick. If you were to take the really aggressive entry, look at how this starts to play out. It runs straight down to that first standard deviation level. You were completely protected up here because of that SMT divergence. I think price did go into kind of chop mode after this. Eventually, it does come down at some point and take out that external low down here. I don't remember exactly when it does that. But you could have taken your TP at first standard deviation, gotten out of your trade, and been happy and just been done with your day. I know at some point it does come down for that 4-hour low. I just don't remember when. So that is the first way that you could trade the orb. That is a more aggressive entry model. But remember, you have to be paying attention to SMT. If ES gives us an SMT and sweeps that orb high and NQ is in a fair value gap above the 50%, now you have the green light to look for your trade. Now, let me just show you another way you could have actually gotten involved in this. If you didn't want to take the aggressive entry up here, you could have waited for this reaction, the strong down close candle creating a bearish order block on the 1 minute, and then this 1 minute bearish fair value gap that formed here. Now, you could have taken this trade and just kept your stop above this high right there, and it would have been the same results, right? Just a little bit lower of an entry, but more confirmation, same results. Okay, let's talk about the next way you could have traded this orb breakout and still caught a lot of reward, a lot of ticks or points on this move. So we saw this one come down and break out. If we look to the left of our charts, we're going to see that we have this 1 minute bullish for value gap. And this gets inversed or inverted, right? So right there, that becomes an IFVG. All this does for us is it confirms that we have bearish order flow. That price is probably going to continue lower. But we never actually come back and retest that level, so it wouldn't be the greatest entry unless we came all the way back up here and tested it. So all we need to know is that we inverse this. So that just gives us the confirmation that order flow is very bearish. But really what I'm looking at is that we close below strongly beneath the orb low. And not just on the 1 minute time frame, but also on the 5 minute time frame. And we also created a 5 minute bearish order block. So I like to look at the 5 and the 1 minute time frame for closes outside of the orb, not just the 1 minute time frame. So here's the other way you could have traded this. You could see that we have this 1 minute fair value gap. I'm always looking for fair value gaps that overlap the orb, whether it's an FVG or an order block. Right here we have this 1 minute SIBI, and this is now overlapping our orb low with a strong draw on liquidity below us. So now another entry we could take is right here. If price taps into this FVG, we keep our stop above the wick. And then what we do is we target that first standard deviation or even lower if we were going to continue down, but at least the first standard deviation. And you can see right here that still offers us a 2.21 RR or a 2-to-1 RR on this trade. So let's watch how this one plays out. Right, so we tap into that fair value gap, boom, straight down within like 5 to 10 minutes, right down to our TP at that first standard deviation. So that is another way to trade the orb. This is more of a it's not as good of an entry, but this has more confirmation for us that price is continuing in the direction that we want to see. So this is more of a breakout continuation trade, whereas this is more of the reversal aggressive trade. This is the more conservative approach. But either trade would have given you a really good RR, would have given you a lot of reward. You could have walked away from the day very happy with a lot of profit with either of these trades that you took. Now, the reason I like 1 minute fair value gaps and order blocks around the orb is it gives us structure. A lot of traders like to just chase the breakout the second that a candle closes outside of the orb or even wicks below the orb. But for me, I need to see more confirmation because if you always chase the orb breakout, it's not going to always confirm that price is going to go in your direction. What I want to see is actual market structure, like a fair value gap, like an order block with resistance or support that shows us that price is rejecting a certain level. So that's why I like waiting for an FVG or an order block, and then I like taking my entry off of that. So those are two of the best ways that you can trade the 15-minute orb, and those were both examples from the same exact day where you could have taken either trade and made a lot of money from either one of those. So all you need to do is figure out which orb strategy fits with your trading style, with your personality, and what makes the most sense to you. Because for some traders, the second breakout is harder for them to trade because they don't like chasing breakouts, which is understandable. So they might want to trade the first one. But for other traders, they don't like trying to take aggressive reversals or guessing the top. So they would rather wait for confirmation and take the second setup. The good thing is that either setup can fit your style of trading. So you just need to figure out which one works for you. But hopefully you gained some value from this video and now you will level up your orb trading just a little bit. Remember, you always want to have target liquidity. You always want to be reading higher time frame structure with fair value gaps and order blocks to get your daily bias. And then you want to lock in an actual entry model with real confirmation of market structure. Thanks for listening. Thanks for watching. I'll talk to you soon.